Introducing Green Shoots, a new podcast from Lord Abbott that covers all things ESG. Tune in to hear from leading experts about how ESG strategies are constructed. Available now.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Well, boy, I'll tell you what has been a fascinating story in Wall Street has been Bill Hwang and Archegos Capital. I mean, it just burst onto the scenes a week ago. $20 billion fund. Nobody had heard about it until we all heard about it at the same time. And I'll tell you, Eric Schatzker and his team at Bloomberg News, they were very, very early on this story. They were absolutely, and they've been on top of it ever since. Eric joins us now with the latest. Eric Schatzker, he's editor-at-large at Bloomberg News. Eric, thanks so much for joining us here. This is just an extraordinary story. The numbers are just amazing. $20 billion and then gone in 2 days. What's the latest?
Paul, it is absolutely mind-boggling if you think about it. A guy who had been a hedge fund manager, so let's give him some credit. Bill Hwang starts a family office in 2013 with, as we understand it, something north of $200 million. So he's already rich. And he builds this family office over time, making bets mostly in tech stocks, Expedia, LinkedIn. Some of those are kind of names from the past because LinkedIn was acquired by Microsoft, of course, but he also bet on Google, he bet on Amazon. And over the years, he steadily took on more and more and more leverage. And as we all know, having watched and in your case participated in Wall Street for many years, leverage is a double-edged sword. When things are going your way, you can become fabulously successful. And in his case, yes, his fortune actually at one point exceeded $30 billion. Wow. But by the time things started to go pear-shaped, right? Week of March 22nd, Viacom trades down 9%, 23%. Margin call alarm bells start ringing, and Bill Hwang goes from 20 to 0 effectively overnight.
Yeah, the one thing I don't get is how did he go from so much to so little just trading options? Because he
no, not options. These were swap agreements.
I mean swaps. But he's trading derivatives that.
No. He is entering into swap agreements just so that everybody understands it, because it is complicated derivative stuff, as you say, Matt. He enters into a swap agreement. It gives him exposure to the underlying stock. It's like owning the stock, except you don't actually have it in your possession. But because you're levered, because the swap agreement allows you to lever up 5 times, you know what happens if you're 5 times levered, right? Stock goes down 20%, your equity is gone. And his portfolio cratered the week of March 22nd. That's how whatever margin he'd posted disappeared. And that's how his equity blew to smithereens. So much so that the banks, which ended up owning the risk and having to sell it, and we've seen that, Credit Suisse, Goldman Sachs, Morgan Stanley, selling shares of Viacom, GSX, IQ, all of his positions, some of those banks, Credit Suisse among them, ended up taking enormous losses, $4.7 billion. The head of the investment bank is gone. The head of risk is gone. Another half dozen executives gone. It's incredible how much damage one guy running his own family office can wreak on Wall Street.
Your story paints this incredible dichotomy because on one hand, he's, by all accounts, a very nice guy. Julian Robertson loves him. He's religious. He's got a big charity that he cares about. Charity and family are 2 of his 3 main things, right? Mm-hmm. On the other hand, he had a $60 million settlement for insider trading. His hedge fund pled guilty to wire fraud. And he seems kind of like a trader sociopath because he says he's not afraid of death or money, which you see how that ends up, right?
Yes, we have. I would say, without using the word sociopath, that what you've just sketched out is the internal paradox of a Bill Hwang. On the one hand, pillar of his church community. This guy helped 1,300 North Koreans escape the hermit kingdom to freedom. The guy is doing good stuff. And on the other hand, he's got this addiction, effectively, or what appears to be an addiction, to casino-like risk-taking. He's a gambler. Most of the great gamblers in the world know when to take some chips off the table. This guy never took any chips off the table. The only chips he took off the table, he put into his foundation.
Yep.
And thank goodness he did, because it's gone on to do good work and will continue to do good work, because so far as we understand, it wasn't exposed in this blow-up.
So, Eric, about 30 seconds left. This seems to be, I guess, the second life for Bill Huang. Is there a third?
Oh, it's actually we're with the third act, right? He was Tiger, then he had his own hedge fund, then he had Archegos.
Very good.
Where does he go from here? If risk-taking is in his blood, and he, just like, Michael Jordan can't stop making layups.
Vegas, baby.
Right? You'll see him back doing something. Is he going to be given the same kind of leverage? No, almost certainly not, right? There are just too many black marks on his record now for any bank to want to give him. But will he be doing something, that involves incredible risk-taking? You'd have to expect that he would, because it's, as we've learned in the course of our reporting, it's in his nature.
Yeah, I mean, this is also a thing I was thinking about as I was reading your piece, Eric. Where does he go from here? Because you want to see him come back again. You almost want to see him get back in, right? And maybe now that sports betting is becoming more acceptable in the U.S., he can figure out a way to do that. In any case, Eric Schatzker writes the cover story for Bloomberg Business Week. Definitely check it out, if not on the newsstands, at least online or on the Bloomberg terminal. Talking about the initial job claims number, and it's interesting that we've seen these initial jobs claims numbers still at a very high level. I think, I'm not sure, but I think we still haven't come down under the record high from the great financial crisis in any week. Let's bring in Lindsay Piegza to talk about this. She's chief economist at Stifel Financial out of Chicago. Lindsay, what's the problem with the labor market in that, we add 916,000 jobs and we have these incredible manufacturing figures. ISM is off the charts. PMI is off the charts. Everything looks like it's coming back full force, but we keep getting huge initial jobless claims weeks.
Well, I think this recognizes the fact that the recovery is going to be somewhat uneven. It's not going to be this very simple flip the switch scenario. Everyone goes back to work. It's going to be this back and forth, this ebbing and flowing of improvement. And yes, we have seen payrolls jump. We've also seen jobless claims remain elevated. So again, this really speaks to the notion that it's going to be some time before the U.S. economy recovers to a sustainable upward trajectory. I think also when we see this unevenness in the labor market, it in part reflects some of the policy measures that we've seen out of Washington. Remember, we're still talking about extremely generous unemployment benefits, and some businesses, particularly small businesses in the service sector, have reported that it's very difficult to reconnect with employees because of these very generous unemployment benefits. So I think there's a number of moving pieces, a number of different variables, but the take home is really it's not going to be as simple as we're vaccinated, let's reopen, the economy's back to pre-pandemic activity levels.
All right. So, Lindsay, right now we're taking a look at the President Biden's latest fiscal stimulus plan, that $2.25 trillion plan. What do you make of that? Is it? Do you think the focus and the strategies behind it are sound, or what would you like to see in fiscal stimulus?
Well, at this point, with the economy showing signs of improvement, vast improvement in the labor market, in manufacturing, in services, in housing, I think we really need to take a pause in terms of any additional fiscal spending at this point. Remember, the president just passed his near $2 trillion spending package just a few weeks ago. So the impact of that has not even filtered through the economy. We're not even seeing that in the data yet. The March non-farm payroll report more likely reflected the December stimulus that we saw under President Trump. Excuse me. So I do think that at this point, the government should be taking a breath. They should be looking at thinking maybe more of a longer-term reopening plan and perhaps getting a second plan in place should we see a second round pandemic occur in our near term. So I don't think additional spending is the answer at this point. I am very concerned about the debt level. I'm very concerned about inflation longer term. And this unsatiable appetite for federal spending, I think, really needs to be nipped in the bud.
It's crazy if you're a journalist, though. I mean, what a story to cover. How many times in history have we spent, $5 trillion extra dollars in a 12-month period, and the Fed has stepped up with how much emergency, balance sheet
trillions more, right?
Yeah, trillions more, like 7 trillion more. It's the numbers are mind-boggling, as Adam Johnson used to say. But how does that create inflation? Does it just create transitory inflation, or do we get some real inflation from that kind of spending?
Well, so when we talk about the transitory concerns of inflation that the Fed has been mentioning, they're not referring to the massive expansion of the money supply per se. What they're referencing is the fact that we do expect prices on an annual basis to tick higher because those low lows of 2020 are actually falling out of the calculation. So just by the nature of the mathematical equation, we expect that headline index to tick higher in the coming months as we move further into the summer. But from their standpoint, they're saying this calculation, this falling out of weaker prices, is going to be temporary, and they expect inflation to remain near that 2% level by the end of 2021. Going forward, however, when we talk about this massive expansion of the federal government's balance sheet, all of these dollars flooding into the marketplace, chasing after goods, chasing after production, that's where we see that increase in inflation. And that's where the market is concerned will drive the Fed's hand or force the Fed's hand to raise rates sooner than they're telling us they will.
Lindsay, thank you so much for joining us yet again. Lindsay Piegza, chief economist for Stifel, joining us on the phone from Chicago, talking to us about fiscal stimulus here. Again, we've haven't really felt the full benefits, arguably, of the most recent $2 trillion, while more is being
I've felt
discussed.
None of it.
Yeah, exactly. In Berlin, Germany, I guess not.
Green Shoots is a new podcast that dives deep into how ESG strategies are developed. Tune in to hear conversations with leading experts in ESG investing. Hosted by Lord Abbott's portfolio manager, Annika Lombardi. Listen and subscribe to Green Shoots wherever you get your podcasts.
Matt, we are so fortunate here at Bloomberg Radio to be able to tap into the expertise of leading physicians and scientists from around the world during these past 14 months to really get a sense of and really learn more about the virus, therapeutics, and now about vaccines. And our next guest certainly is on that list. Dr. Stephen Corwin, he is a president and chief executive officer of New York Presbyterian Hospital. He joined us on the phone from New York City. Dr. Corwin, thanks so much for joining us here. I guess where we're at right now is, people they absolutely feel like we're just on the precipice of getting to the other side of this. The vaccinations are ramping up, yet we're seeing cases surge in certain parts of the country like Michigan and others. How do you think people should be, conducting themselves these days here as we're right on the edge?
Well, I think we're at the beginning of the end, but we're not at the end. And for people who are football fans, you don't want to spike the ball at the 5-yard line. So I think the reality is we still have to be careful. We still have the variant floating around. We still haven't vaccinated everybody. We haven't gotten to herd immunity. So if we can hold on a little bit longer, let's try not to have 45,000 people at a Texas Rangers game. We'll get there. But it's a race between the variants and how much we open versus getting people vaccinated. And, I'm really hopeful that by summertime we'll be in terrific shape, but we've just got to hang in there. And look, I know it's daunting. Kids home from school, people want to get back to the way things were, et cetera. But we still have to be cautious.
How do you think the vaccine rollout is going? I mean, I know it's going quickly in the U.S. I think more than 65 million people have received at least one shot. But is it being distributed equally across all different classes, races, creeds? I don't know what to say exactly. You get my point, right? Is there? Of course. Is there a problem here?
I think there's been a great deal of emphasis. Certainly, we've placed a great deal of emphasis on equitability and giving people access to this. I would say two things to preface my following remarks. The first is I think that the Trump administration got a lot of things wrong with COVID, but they got the vaccine development program right. And the Biden administration has capitalized on that in terms of getting this rolled out as quickly as possible. And, we now have Pfizer, Moderna, and J&J that we're now giving. And we have to evaluate AstraZeneca in light of some concerns about data safety monitoring. That being said, I think that you have to educate everybody to sort of overcome vaccine hesitancy. And to truly get population herd immunity, we're going to have to start vaccinating kids, which is probably not going to really happen until we get into the fall and the winter, meaning children under the age of 12. So we still have a ways to go in terms of children getting herd immunity. I think we can get the herd immunity in the September timeframe for the adult population. And I think we're making a lot of strides on equitability of distribution.
Dr. Corwin, I'd love to get a sense of how the frontline workers at New York Presbyterian are doing. I mean, hospitals across the country, but I really think about New York City a year ago from today and how incredibly taxed they were. How are the frontline folks doing at New York Presbyterian?
Well, look, running towards danger on this one, right?
Yeah.
I think we have just absolutely terrific people. I think that they've done an amazing job, but they're getting tired. And we still have a lot of COVID in the environment. So I think that people see that we're turning the corner. But it's been a tough 15 months for the country, and certainly a tough 15 months for the frontline workers. But everybody in the country should be proud of the effort that all the frontline workers across the country put in to this, because we wouldn't be where we are as a country without it. And I can't thank every one of our employees enough for everything that they did. And many of them lost family members during the course of this pandemic, and I'm sure you guys know people that were lost. It really has been pretty horrific.
But it also, I think, shines a spotlight on how hard healthcare professionals work. I mean, just in terms of sheer hours, it's pretty shocking to people from any other industry. Do you think there's some kind of progress that can be made in either paying them better or getting them safer working conditions?
Well, look, I think that we collectively made a mistake as a country in terms of the amount of PPE we had in stock. The supply chain was very fragile. So, we have to really solidify our supply chains, make sure that we have more onshore manufacturing, make sure that the supply chains are more robust so we don't have a repeat of that. That was really quite tenuous, as you all remember. In terms of paying people more, look, I'm a firm believer that you have to pay people for what they do. The minimum wage that we pay is $19 an hour. I know people are talking about what should the minimum wage in the country be, but people deserve to be able to make a fair living, and if they're in health care, they should be paid appropriately, in my opinion.
Dr. Stephen Corwin, thanks so much for your time. Really appreciate it. Dr. Stephen Corwin, the President and CEO of New York Presbyterian, which did so much to help a city under siege, really. And I think at least in the U.S. or worldwide, everyone's appreciative of healthcare professionals. This is Bloomberg.
When hiring gets hard, you need Indeed, the job site that makes hiring incredibly simple. Just attract, interview, and hire. In fact, with Indeed, you can do all of your hiring in one place, even interviewing. Don't just hope your perfect candidate will find you. Indeed's hiring tools help you cut through the noise to hire faster and smarter. If you're hiring, you need Indeed. Get started right now with a $75 sponsored job credit to upgrade your job post at Indeed.com/bnews. Indeed.com/bnews. Offer valid through September 30th. Terms and conditions apply.
It is time for Bloomberg Opinion. We're joined today by Jared Dillian. He's a columnist for Bloomberg Opinion. He's also editor and publisher of the Daily Dirt Nap and investment strategist at Malden Economics. He's based in Myrtle Beach, South Carolina. He's out with a fascinating column here, arguing that, quote, SPACs aren't the only examples of late capitalism. And he suggests that excesses throughout the financial system raise the odds that the next recession could be our last as a free market economy. Jared, thanks so much for joining us here. Tell us about why you think the next recession might be the last one in this economy.
You know, it's funny because when I started to write this article, I was I have a cat that is overweight, and we were buying her a food puzzle. I don't know if you know what a food puzzle is, but
No.
It makes it difficult for a cat to get the food. And, you know, I looked this up on Amazon, and I ordered it in 2 seconds, and I had it delivered to my house in 2 days. And it kind of reminded me of 2017 when, you know, if you spend any time on Twitter, there was all this discussion on late capitalism and all this excesses of capitalism. And that got me thinking about SPACs and a lot of the stuff that's going on today.
So, but what? So it's going to be the end? I mean, what does that mean? If there's another big recession, we're going to have the state really take over?
I think what's happening is that from a sentiment standpoint, the bull market has gone on for so far, and we're starting to see a lot of excesses of capitalism. Money has gotten too easy. And yes, I do think that we'll see more state interference in the economy if we have another downturn. And, you know, we're trying very hard to prevent a downturn. The Fed has taken the position that it's actually trying to prevent recessions. It's a very different Fed than what we had 20 years ago.
All right, so Jared, I mean, we step back here and we take a look at the marketplace, and just over the last, I call it 6 to 12 months, you know, during this pandemic, we've had some of the Reddit trades, the GameStops of the world. We've had this explosion in SPACs. I mean, you know, a lot of folks are saying, boy, there's a lot of froth in this market. There's a lot of excess in this market. There's a lot of speculation in this market. Do you see that as well?
Yeah, I do see that. And, you know, the SPACs in particular, the interesting thing about SPACs is, you know, I actually think SPACs play an important role. I mean, the IPO process is kind of broken. It's kind of cumbersome. And there have been some actually really great companies that have gone public as SPACs, but there's also been a lot of stuff that is terrible and is a joke. So, you know, there's a lot of excesses in this bull market. And if it continues, we're going to get more excesses.
So I wonder, though, what society looks like after the end of free market capitalism. Have you ever seen the animated film WALL-E? Because
yes,
I love the dystopian future of me getting amazingly fat, sitting in a chair that moves around a cruise ship, just drinking Slurpees all day and watching TV. Like, I'm not opposed to that if the robots take over and we just get paychecks. Is that how it's going to work?
You know, it's actually funny. I mean, bringing up the getting paychecks here in Myrtle Beach. This is changing the subject a little bit. You know, this is a hospitality town. I mean, it's a vacation town, so it's hotels and restaurants. That's basically what we have here. And Myrtle Beach is in big trouble right now because they cannot attract any talent to help out at these businesses as housekeepers or as servers or as cooks because we are paying people to stay home. And you can't get meals, you can't get dinner reservations, you check into your hotel at midnight. This is a really extreme situation here in Myrtle Beach. I don't think this story has really gotten out yet.
That is fascinating. I mean, we get these jobless claims numbers that we got this morning, Jared, and yet I walk down Main Street of any town in New Jersey, and almost every store has a help wanted. Now, granted, I'm assuming it's a low wage kind of clerk type of role, but every business is looking for people.
Well, Lindsay just told us, Paul. We just interviewed the Stifel economist Lindsay Piegza, and she said, well, one of the reasons you get these huge initial jobless claims numbers is that people get paid so much to be jobless right now. I don't want to sound like a jerk when I say that because there are a lot of people that I'm sure would rather have a job than not, and I mean millions of people. But the point is, paychecks. That maybe we're already getting into that kind of dystopian future. I don't even know if it's dystopian, but where do you think this all started?
Well, I mean, the one thing that's going on is that this is going to result in inflation. And what's happening is that private businesses have to bid against the government for workers. So even though we haven't passed a $15 minimum wage, what we have is like a de facto $17 minimum wage because businesses have to bid against the government for workers. And, back when I was on Wall Street 15, 20 years ago, and commodity prices were going up and people were wondering if we would have inflation. And the economists at the time were saying, you need wage inflation to have inflation. And this is the beginning of wage inflation. And if you go back to the 1970s, we had this term called the wage price spiral, where people's wages are going up and they spend more on stuff, and you get this inflationary spiral. Like, this is how this begins.
So, Jared, we have more fiscal stimulus coming down the pike here. How do you view that?
Only a couple trillion, though.
Yeah,
it's only a couple
right.
trillion.
I view it very negatively. I mean, a lot of this stuff that we're doing on the fiscal side and also on the monetary side was intended to be an emergency measure. All the Fed's liquidity programs, the corporate bond liquidity programs, municipal bonds, stuff like that, that was supposed to happen during the pandemic, and then it was supposed to go away, but it hasn't gone away. And, we've done 3 stimulus checks right now, and we can't seem to be able to stop, even though, the pandemic isn't really over, but it's kind of mostly over. So I think it's time to start pulling back these emergency measures and let the economy get back to normal.
One of the cool things that we have seen, and I don't know if this would be an example of the kind of excess you're talking about, is people are now have now been paying like serious amounts of money for newsletters. And, this is something that hasn't happened since, I think, back in the 1800s. It's a great way for journalists to make money. And I was just thinking, because I've been a longtime subscriber to the Daily Dirt app, you can make a lot of money that way. It's pretty popular, and people are starting to pay like $5, $10, $20 a month for these newsletters. Anyway, Jared Dillian, great to get your take. Fantastic column. You can check out that piece and all of the opinion pieces by typing OPIN-GO on your Bloomberg terminal or Bloomberg.com/opinion. This is Bloomberg. Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.